Sagan.
Hello friends, Guts and Glory welcomes you all. I am Pankaj Khanna, a company secretary in an MBA, basically a technical analyst. There has been many instances where people ask me about my professional career and passionately what I do. Well, professionally I am a CS of a limited company and an MBA. I look after technical analysis and passionately I am an academic writer as well as a model. So there has been few of the glaring examples where my clients have succeeded really well in terms of technical analysis, where I have given a lot of recommendations and they have really uttered good words for me, and they have really asked me to go ahead and fetch the views over to you, over to the community at large, so that you can also grab the opportunity and earn handsomely from the stock market. So our first session will be delivered on technical analysis. It's not a rocket science. Once you see the video, you will get a good learning. It's all that. Let's go to our main section, that is technical analysis. Let's know what is technical analysis. Firstly, technical analysis is the art of identification of the pattern of the charts, how the charts behave. Accordingly, you can make a move over there. But before going to the technical analysis part, I would like to give you a brief description. Why stock market? Many people have the notion that stock market leads to losses. Stock market jua hai. But that's not the case. Stock market gives you three things, that is a higher returns, diversification and portfolio management. Higher returns, it really beats the bank FDs, other forms of savings. So if you invest in a stock market prudently, you will get higher returns. Secondly, you have diversification. Diversification, you can put your money in different stocks. So that is diversified. Even if you get losses in one, you can make it up in another by getting a higher return over there, by making a profit over there. So diversification benefit is there. Then you have the portfolio management. Portfolio, well, it's a basket of securities. You put your money in various securities, you keep on accumulating them, and at the end you will get a better return. So ultimately, if you go to stock market, you will have these three things. And let's leave the risk factor aside. There are risks, but I will suggest all my traders to be long in the position so that you get a good return. Those who are conservative should go long, and those who are adventurous, they can go short. So that's the main motive. Let's go to our next session. Here we come to the second part, that is stock analysis. If you want to do stock analysis, we have two options, that is the fundamental analysis as well as the technical analysis. So before venturing into the technical analysis part, I would like to give you some brief description about fundamental analysis. So there is a differentiation between the two. Fundamental analysis is the analyzement of the data which we get from the company financial statements. The financial statement comprises of the balance sheet, profit and loss account, and the cash flow statement. So when we go to the balance sheet, we can know the assets and liabilities position. Henceforth, we can find profit and loss account, from where we can know whether the company is earning profit or earning losses. Incurring losses. Thirdly, we have cash flow statement. Cash flow statement, it has to know the earnings from the operating activities, investing or financing activities. So basically, if we analyze all the three things, we will get to know how the company is behaving. Actually, it is a mirror for the company. We can get the true position of the company through these three statements, through the financial statements, and through these three indicators. So here what we do, we compute ratios, we analyze the past data with the present data, and actually it's all about numbers. And analyzement of the data will help us to know whether the company is behaving in a strong manner or it is dull. So actually we can know from this point of time that whether we should go for the company, we should invest in the company, or we should not invest in the company. So this is all about fundamental analysis, and that things, it's not there in technical analysis. So now we will move to technical analysis. Let's move to a main point of discussion, that is stock analysis. We have already discussed about fundamental analysis, and now we move to a main point of discussion, that is technical analysis. It's not a rocket science, yeah. So technical analysis, it's all about analyzing the chart pattern, the price pattern, how does the price behave. In order to know technical analysis, we must know these things, that is the Dow theory, trend pattern, support and resistance, and line chart. Because what I understand from my experience, that if you know this, you can easily move to the next part, that is the indicators. That is a very important concept, but before going to that, you must know the brief of technical analysis. How does the technical analysis has its base? Let's move to the Dow theory. So what is Dow theory? I'm not going into the history of Dow theory, but rather I would like to know you the main crux of the things. What does Dow theory indicate? Dow theory is all about analyzing the price movement, knowing the price movement. How does the price movement change? So the first golden rule is higher high goes with higher low. So if we see that this is the price pattern and this is the framing of the chart, we will see that higher high, here it is a higher high, then again it's forming a higher high, then it's again forming a higher high. So once it forming a higher high, it will go down, that is the higher low. Then we'll see that again a higher high is accompanied by higher low. So ultimately we can now predict the trend that the higher high will go with higher low. So ultimately from here we can expect that the price will go another high and will take a low. So again in the third step it will take a high and will take a low. So this might go on. This might go on and you can at least predict from here. However, but the stock pattern doesn't move in the same direction. Afterwards it might lead to average one and then it might decline. But at least from here onwards we can find that this will be the price movement. The second golden rule is lower high goes with lower low. So once we have seen that higher high goes with higher low, now the lower high, see this is the lower high and again it has formed a lower low, lower high, lower low, again it forms a lower high and again it forms a lower low. So this we basically find when it is in a downtrend. So ultimately we can at least make the next step. What's the next step is by feeling this, that is lower high goes with lower low, and this is an uptrend where we find that higher high goes with higher low. So ultimately if we want to analyze, I will ask you to just see the price pattern either for today or tomorrow or any historical chart. You will find that this is the main thing which you will observe in all the charts. Now we move to our next point of discussion, that is the trend pattern. Trend pattern. How does the price or the chart is engaged? So if we see that the stock market has three types of thing, that is the short trend, intermediate trend, as well as the primary trend. So there are three types of trend, and in order to know this three type of trend, see suppose if we draw a price chart like this, the stock market is going up, it's averaging and then going down. This is just a hypothetical example. If we see the short trend exists for around 2 to 6 weeks. The intermediate trend exists for 9 months to 2 years, that's approximate, while the primary trend exists for 4 years. So if we sum up the entire chart, we will see that once the stock market goes up, then it's average out, or it has a consolidation phase, and then it ultimately drops down or the decline. So in all total, this is the trend pattern. These three are the trends, that is the short trend, the intermediate trend, and the primary trend. The primary trend consists of the entire thing. So this is all we know about trend pattern. Now let's move to a third factor, which is support and resistance. Well, support and resistance, the normal meaning we get a support from a baseline, or resistance means we get a resistance level from above. So ultimately this also means the same thing in technical analysis. It's not a rocket science what I said. So basically we can see that the price movement are ups and down, ups and down. So we can see a line or a price level where the stock gets a support, where the stock movement gets a support and bounces back. So suppose this is the price level 230. So we can see at this line many a times the stock has striked over here and ultimately it has bounced back. It is not getting below it. So that is the support level. And there is one point where it gets break. So we can see at that point of time it will fall down. We can sell at this point of time in order to move out of the market. So this line where it gets a good support, that is the support. Why it's equivalent for the resistance? What is resistance? It gets a resistance power from above. So we can see this is the line where the stock has strike many a times, but it has not gone above it. So we can look for a breakout. It will break at some point of time. However, it is not happening because this resistance line is there. So we can, for example, 250 was the line of resistance, imaginary line. So we can see that here at different level the stock has strike this line, but it is not getting above it. But however, at a certain point of time or after a certain time span, we can see that it is breaking this level. So at this level we can buy, so that in order to get higher momentum, the stock price will move further. We can expect that it will move further. So once it breaks the resistance, we will know that it will go higher, and therefore we can go on a buy mode. We have line chart, we have candlesticks, but I will recommend you to go to the line chart. The line chart will look like this. Forget about these lines. The line chart will look like this. The stock is moving, the stock is going down, the stock is consolidating, then again moving, it is getting its peak. This is the peak. Okay, so these are all the things. So, and from the line chart we have two things which we can do. That is, we can find a trend whether the line chart is showing a bullish movement or a bearish movement. So what we can see, when the line is getting connected, the two peaks are connected, or we can get a uptrend. So this time we can feel that this is an uptrend, and when it gets break, ultimately we will find that this uptrend has broken. Again we will see that in case of downtrend also, we can find that we can have a line, we can find a trend, and we can know whether the stock market is in a bull mode or a bearish mode. So we can see that there are various peaks which are going down, and once we join this, or once we draw a line, we will see that it is showing a complete downtrend, and after this the consolidation factor starts, and again it has started to move. So again I would like to say that use line chart, where we can get complete information, as it is easier to draw the trends, that is the uptrend or the downtrend. We can get to know from this, that is the line chart. So I would recommend you to use line chart, and these were all the basic things. So I would like you to check the website. There are different websites where you can get the past information, the price information, or you can find for the tomorrow morning also. Then you just analyze all these things, you will get a brief idea of what technical analysis is. So friends, this was all for the day. Guts and Glory will come up with another video just like the one we have discussed, that is technical analysis. Now it will be on indicators. I hope you all liked it. We create, you grow, you succeed. Keep liking, keep subscribing, and stay tuned. Bye bye.